tax tips for Malaysian in 2025. Save more with budget updates. Hi everyone! Want to save more on taxes in 2025 while staying ahead with Malaysia's budget updates? You are in the right place. I'm Ewen, your Malaysian financial influencer, and today I'm sharing 6 easy tax tips inspired by Casey Lau's money tips, plus the latest from Budget 2025. Whether you are a Bursa Stock fan, a Penang factory owner, or just want to earn extra cash for your next sister trip, these tips will help you to keep more in your pocket. First, dodge the new 2% dividend tax. First up, Budget 2025 dropped a bombshell. If you earn more than 100,000 ringgit in dividends, like from Bursa Stock, you will have to pay 2% tax on the extra starting this year. What to do? Check your dividends income now. If you're close to 100,000, shift some investment to tax-exempt sources like Amanah Saham Bumi Putra or in short ASP or into your EPF account. Example, say you made RM 120,000 from franken dividends, that's RM 20,000 over, which is equivalent to RM 400 tax. So you move some to ASP and you are tax-free. Second, claim your upskilling relief. Here's a gem extended to 2026, which is RM 2,000 tax relief for upskilling courses, think photography, baking, or even coding. What to do? Sign up for a fun course and claim it. At 21% tax rate, that's about RM 420 back into your pocket. Third, save with EV charging relief. Got an electric vehicle? Budget 2024 extended the RM 2,500 EV charging relief to 2027. Still good in 2025. What to do? Keep your charging receipts and claim up to RM 2,005. At 21% tax, that's about RM 525 ringgit saved. Example, you spend RM 2,000 charging your EV in Penang. Claim it and save RM 420. Perfect for a rooftop pool night at Pavilion Hotel. Fourth, know your tax residency. Casey Law reminds us, know if you are a tax resident. Stay in Malaysia for 182 days and more, and you qualify for relief like the ones I just mentioned. What to do? Track your days. If you are splitting time abroad, aim for 182 days here to claim deduction. Non-residents, miss out. Example, a viewer settling between KL and Singapore stays 190 days here in Malaysia. They claim RM 2,000 relief and saving RM 420. More for Bursa investment. 5. Prep for SST Expansion. Budget 2025 expand SST from May onwards. It will hit more business services and fancy imports like salmon. What to do? Stock up on non-essential before May this year. Basic food like nasi lemak stay exempted. Factory owners budget for higher import costs. Example, your Penang factory imports premium parts. Order extra in April this year and save a few thousand ringgit before the tax kicks in. 6. Don't miss the book relief. Casey Lau's classic tip. Claim RM 1,000 for books which could range from finance, motivation, or anything. What to do? Buy books to up your game and claim the relief. At 21% tax, that's RM 210 ringgit saved. Example, grab RM 1,000 worth of Bursa books like on Benjamin Graham Value Investing and save RM 210 ringgit and maybe spot the next value stock. Budget 2025 updates for factories owners. Quick Budget 2025 updates for factory folks in Penang. Minimum wage hike from February this year is RM 1,700 up from RM 1,500. Budget for your 80% Malaysian workforce, that's Mida's rule. New investment incentive by Q3 2025, tax break for high value stuff like chip design. Franken Inculim is gonna love this. Budget 2025 announced on 18 October 2024 introduced a new investment incentive framework, or in short NIIF, set to roll out in the third quarter of 2025, which is around July to September this year. This framework is all about encouraging high-value activities. Think advanced tech-driven projects that create skilled jobs and boost Malaysia's economy. One area they are targeting is integrated circuit design, which is basically the brainy part of chip making. designing the tiny circuits that power everything from smartphones to AI systems. The government is offering tax break under this framework, meaning companies that invest in these high-value activities can pay less tax either through investment tax allowance or ITA, a percentage often 60% to 100% of what you spend on equipment or projects can be deducted from your taxable income. Second, income tax exemption. A chunk of your profit, for example 70% to 100%, might be tax-free for a set period, say maybe 5 to 10 years. Why does this matter for Franken in Kulim? Even though Franken isn't directly in IC design, they focus on precision engineering and surface treatment for semiconductor equipment. They are part of the chip-making ecosystem in Kulim High-Tech Park. This incentive can attract more chip design firms to the area, increasing demand for Franken services like cleaning and coating the machines that design and produce chips. More business for Frankens means more growth, which is great for their stock on Bursa. Why it is a big deal? For factory owners in Malaysia, if you're setting up a factory, let's say in Penang, you might qualify for this tax break if you pivot into high-value areas like chip design or related tech. Imagine paying zero tax on your profit for the next 5 years. That's extra cash to grow your business. Example, say you are tech boss in Berhad and you decide to start designing chips in Kulim near Franken. You spend around RM5 million on design software and equipment in Q3 2025. With the NIIF tax break, you might get a 100% investment tax allowance, meaning you deduct that RM5 million from your taxable income. If your factory makes RM10 million in profit, you would normally pay around RM2.4 million in tax based on 24% corporate tax. But with the allowance, you might owe zero tax on that profit for a few years, saving you billions to reinvest. Meanwhile, Franken in Kulim gets more orders to maintain your machine, boosting their earnings and stock price. Win-win lah! Carbon tax in 2026. If you are in steel or energy, prep for costs. Go green now to save later. Budget 2025 announced that Malaysia will introduce a carbon tax in 2026, targeting high-emission industries like iron, steel, and energy. Think power plants or oil refineries. A carbon tax is basically a fee you pay for every ton of carbon dioxide your factories pumps out. It is meant to push companies to pollute less. The government hasn't shared the exact rate yet, details are still being worked out. But the idea is to make heavy polluters pay more, while the money collected will fund green tech programs like research into solar panels or electric vehicles. For factory owners in these industries, this means extra costs starting in year 2026. If your factory emits a loss of carbon dioxide, say from burning coal or processing steel, you will have to pay this tax, which could eat into your profit. The tip is to go green now means investing in eco-friendly tech like solar power or cleaner machinery to cut your emission before the tax hit. Why it is a big deal? For factory owners in Malaysia, if your factory isn't in steel or energy, for example, you are in semicons like Franken, you are safe for now. This tax doesn't apply. But if you are in related field like supplying steel parts for chip machines, you might feel the pinch indirectly as your costs rise. Going green early, that is, switching from renewable energy, can save you from future headache. Example, imagine you run Steel Boss in Berhad in Penang, making steel frame for factory buildings. Your plants emit 1,000 tons of carbon dioxide yearly. If the carbon tax in 2026 is around RM50 ringgit per ton, a rough guess based on the global rates like Singapore, Sing dollar 25 ringgit per ton, you would have to pay RM50,000 ringgit extra. Ouch! But if you spend RM100,000 now on solar panels to cut emissions by half, you would only emit 500 tons, paying just around RM25,000 in tax. Plus, Budget 2025 offers a green investment tax allowance, or in short, JITA. You might deduct that RM100,000 solar cost from your taxes, saving RM24,000, that is 24% of corporate rate. You save money, help the planet, and avoid a bigger bill in 2026. Smart move, right? There you have it. 6 tips plus Budget 2025 updates to keep your wallet happy. From dodging dividends tax to saving in EV relief, you are set to win in 2025. Which tip is your favorite? Drop it below. Like, subscribe, and let's keep growing our money together. Bye!